a lot of this money that's coming into the sector now through, a number of these financings, we're starting to get more generalist money. We're starting to get new money coming in.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on following the Fed's stunning inflation campaign, maybe hyperinflation campaign. Last week, Jerome Powell reminded us that he never plans to raise interest rates. And shockingly enough, investors are flocking to the gold market, perhaps outside of, even more so than in 2011. Although, fortunately, in either case, I have my friend Jeff Wilson of Precipitate Gold, who's, literally in the trenches, has a great insight and perspective to the markets, and excited to dig in. So, Jeff, thanks for joining me today. How's everything going with you?
Things are going well here, Chris. Thanks for having me. I really appreciate the opportunity to be here.
Well, it's a pleasure. I've enjoyed watching a bunch of your interviews. You're on my friend Trevor Hall's Mining Stock Daily podcast, a great show. And he really did a great interview and talked a bunch about your projects, which we'll get to because there's some interesting things there I think folks would be well served to know about. Although, just before we get there, I'm curious what you've seen. We talked about a little before, but it's amazing how much the investor environment has changed, where I think a lot of us in the mining community were feeling it mid-March, wondering, gee, has the sector just been pummeled for the next 5 years? And then what a rebound. So love to hear your thoughts on what you've been seeing in terms of that.
Yeah, I concur. The amount of money in the system here over the course of the last several months, money being raised by companies of all different sizes and stages, whether they're junior exploration companies or miners. We're seeing, repeatedly financings being announced, of $1 or $2 or $3 million that are then being upsized, and we're now seeing bought deals. These transactions that are happening, secured money or overnight. This is an indication of a very compelling market. And I think, that says to me, when you look at, as you mentioned what happened in March, where, I think we all got, very concerned about the way that the market downturned at that time. But I look back now at some of the stocks and some of the equities and what they've done since then, and they're trading at levels far beyond where they were before the collapse. So you're seeing equities start to recover. You're seeing the price of gold hold up incredibly well, although it's been somewhat volatile. The overall trajectory on gold looks great. And, I think that, it's incumbent now upon the sector to, deploy this money that's being raised in a wise and efficient manner, and try to generate, some real meaningful results I think to reward some of these investors, because, as you and I talked about a little bit before, I have to believe that a lot of this money that's coming into the sector now through, a number of these financings, we're starting to get more generalist money. We're starting to get new money coming in. And so, again, I think it's important for the longevity of this run on the equity side of things, for companies to use that money wisely and generate results that can bring about real return on investment for those investors, so that they become sticky and they become investors that want to redeploy those proceeds back into the mining sector.
Yeah, it's interesting you mentioned that. And actually, I'm grateful that you mentioned that, because I think that's the kind of thing that I didn't often find that perspective or that approach during my time on Wall Street. So just hearing that is refreshing. And also it's interesting because, like you said, we are seeing people who have not been in gold and silver before. I remember maybe early April, I was thinking, this was just the gold and silver bugs, although I've been seeing that's not the case. So you have two different investor profiles, where I would guess maybe the gold and silver bugs a little more hesitant because they've been burned a couple times in the last few years, versus some of the folks who are new, just seeing the Fed money printing. And is it a bit, so it is a new client segment essentially?
I think so. And I think that's important. Again, this is my own analysis here, but I think what's important about that is, as sort of the gold sector, or maybe the gold bugs, as you call them, sort of regurgitating their money and rolling their money back in, into something and then out. I think there was a tendency, because of how, quite frankly, how bad the sector's been for such a long time, that even modest profits for a lot of investors, they were prone to sort of take those profits off the table. You know, something's up 20%, man, take your money off the table and protect it so that you can play the next one. And I think that was probably putting a little bit of a cap on some of the equity prices, because you had that same audience trying to just make sure that, oh man, I've actually made a little bit of money. Let's take it. I think what you're seeing now with the introduction of new money is people who are, you know, not as jaded and burned by a sector that's been kind of struggling for many, many years. And so now you've got people that I think are willing to let some of that money ride a little bit, and gold bugs, you know, who have been in the space, seeing these things now not just going up 20%, but going up 50%, 100%, 200%. And so now you start to have that longer term belief that these things really can get to some of the levels that we want them to. And so money, I think, is becoming a little bit more sticky in some of these equities. And again, I think that's good for the sector, because it allows companies to do much more meaningful work and progress their stock prices and their stories without having to continually deal with selling pressure. And then you've got to raise money at lower prices and you've got selling pressure. So it feels like we've broken out of a little bit of a cycle there that to the upside, which I think is good for everybody.
And how has it changed? It's interesting. It, I guess, didn't creep up. I mean, it's been pretty wild, but now I keep thinking about how around 1750 gold, we're not that far off from 1900 high, and then God only knows what happens with. We were joking. Jeff is Canadian. I'm American, so I wonder if he giggles at us Americans as we buy high, sell low, chase momentum. But even that aside, just, you know, even at 1750 as opposed to 12 or $1,300 gold like we've seen for a couple of years, how has that changed the environment so far for the miners?
Yeah, well, I mean, obviously, I think there's again, that is somewhat symbolic in the sense that I think a rising gold price has brought in a lot of those general investors that we talked about. But obviously, you know, the economics for gold prices of 17 or 1750 versus 12 or 13 is significant. I mean, if you know, you think about the margin upside there for producers, you know, that's a significant and very dramatic and quick sort of increase in margins that a lot of mining companies will be benefiting from now. So I you know, again, my speculation is that you're going to start to see, if you're not already, you know, the potential benefits of that in earnings reports, and you know, companies are going to start to outperform expectations with respect to earnings. And I think that, again, has the potential to draw attention from Wall Street and other generalist investors by saying, man, you know, here's, you know, X number of companies all within a certain sector that have outperformed in the face of what we are all experiencing here is pretty volatile and uncertain overall markets. Although things have, you know, typically generally sort of come back, I think there's still some question marks about where the general markets are going to go here. So to see a sector like the gold sector have the potential to outperform almost across the board, thanks to the increase in the price of gold, I think is another way to draw new eyeballs in. And you know, when you start talking about $1,900 or $2,000 gold, you know, I don't think a lot of companies in the sector are relying upon that. I mean, I think that's a nice to have, not a have to have. But you know, when I look back at the pace at which gold moved from say 11 to 1200 up to 15 a year or so ago, you know, that's a pretty significant jump, and it happened in a really short amount of time. And so, you know, so when I look now at the distance from 1700 to 2000, you know, it doesn't seem that insurmountable. I think it's the kind of thing where in the right overall environment, you know, that those kinds of levels can be attained. So so again, I think it's more of a overall sort of perception thing, that if gold does that, I think it'll draw eyeballs, but it's certainly not necessary for the sector to prosper and make money. Like I said, a nice to have, not a have to have.
Yeah, and you mentioned the right environment. Seems like Jeremy Powell and the bankers and fiscal budget of the U.S. is going to guarantee that. Although it reminds me, I did an interview with Brent Cook last year, and I was asking him a similar question about the leverage. Although he had an interesting comment, which kind of echoes what you just said, where usually the management teams that know what they're doing know how to do it in this gold price, in that gold price. Yes, if it goes higher, certainly that's good, but still comes down. And would you say more important than anything is who's running the show and if they actually know what they're doing?
Yeah, for sure. I mean, I think at the end of the day, as I think we frequently get reminded, and not too long ago, starting sort of in March, we experienced this. Black swan events can happen, and I think as a prudent management team or CEO, I mean, I think you have to be prepared for the possible black swan events and the things that you can't control. And I think good projects are projects that are not teetering on the price of gold swinging one day versus the next as to whether they make money or don't. And I think one of the things that I think is working in favor of the sector right now is gold prices for the last 5+ years have really been kind of in that 1100 to 13, maybe 12 something range. So most economic models, whether you're talking PEAs, pre-fees, or even feasibility studies, are engineered on a price somewhere in the $12 to $1,300 range. So when you start seeing gold trading at 17 or so, I mean, these are the companies that were able to make their projects work at a reduced or a lowered gold price are going to be reaping the biggest benefits through these margins that the current gold price is creating. So yeah, I mean, I think it's important that the sector, you're going to have projects now start to come online that are a little bit more marginal, because somebody's going to say, oh man, well, the price of gold 1,700 or 1,750 now, this project works. I think where you really want to be is those projects that were engineered at significantly lower gold prices, because they're the ones who are going to really be the cash cows going forward here.
Yeah, and do you think we're going to see the majors, mid-tiers really start going on some shopping sprees somewhere around these levels? What are you seeing there?
Yeah, I do. I mean, I think that, for the last several years, it seems to me that the majors were forced to be a little bit, they had some house cleaning to do. And I mean, I think that their expenditures, their cost base, their margins were not great, and they divested of a lot of projects, in order to sort of streamline their tier one assets to be able to make as much money as possible in challenging times. And I think that was good for the sector. I think that was a good housekeeping that, look, we can't be bloated. We can't be, overspending on all these things. It's just cutting into the margins. And so the majors were really forced to sort of streamline their efficiency. And I think now, as the price of gold is increasing, I think they're saying, okay, now we've improved our efficiency. Now let's upsize. Let's not just be, let's not try to make one or two assets make money. We're now in an environment where it's time to sort of branch out again. And so yeah, I think you are seeing major companies looking again for supply, looking for growth. And the junior space or the development and exploration space are where that growth will come from, because they themselves completely shut down their internal exploration departments or teams during sort of the lean years, where really what it came down to is how do we make money, not how do we find more for down the road. And I think now the light is shining back towards growth and expansion and increasing size and scale. And I think that's where companies, I'd like to say like ours, who are out looking for that next one, if you will, have the potential to start to attract that major company interest.
Yeah, and Jeff, interesting enough, you actually have had a deal like that. And again, Precipitate Gold is your company. Could you give folks an overview of the investor profile, where things stand, and also talk a little bit about the Barrick deal and what that means, what you guys are doing?
Yeah, so Precipitate Gold is a junior exploration company. We've really been focused on sort of the discovery end of the sector, if you will, trying to go out and find something new and something that has mineable ounces that could be attractive as a possible future mining operation. We've been focused in the Dominican Republic since 2012. And we've got sort of 3 different property packages in the Dominican Republic that we think are highly prospective. One is adjacent to an existing resource operated by a company called Gold Quest Mining. They've got about 2.5–3 million ounces gold equivalent there, where we've got a significant land package in the same geological terrain and have been working that since 2012. We have a project called Ponton, which is in a more mining active part of the country. and our Pueblo Grande project, which we just recently, as you mentioned, did a transaction with Barrick, one of the largest gold mining companies on the planet, whereby they've come in on an earn-in agreement to earn 70% interest in our Pueblo Grande project, which, part of the appeal there is it's a significant size land package. It's immediately adjacent to their Pueblo Viejo mine. And that Pueblo Viejo mine is one of their top 2 or 3 mining operations in the company. It's a $4.5 billion infrastructure mining operation. And so acquiring that ground surrounding them 24 months ago for, believe it or not, $25,000 cash and some shares of Precipitate, to then turn that into a $10+ million transaction with Barrick in 24 months, we think was quite a coup and a really good transaction for our shareholders.
Yeah, and Jeff, you had an interesting answer when in that interview with Trevor. He asked, because he's a shareholder, and said, does that take away some of the upside of the deal? And I thought you had a really interesting response to that. Perhaps you could share that with folks again today.
Sure. I wish I could remember exactly what the answer was, but I think that the response to that is we definitely know that we had a contingent of our shareholder base that were in for the big home run and, swing for the fences and step up to the plate and drill this thing ourselves, which was our intent. We are not, to be clear, we're not a project generator type company. Our goal is not to acquire something early and as quickly as possible find a joint venture partner. That's not really what we do. We like to drill these things ourselves and be along for the discovery success and the upside. But in the case of Pueblo Grande, as we were gearing up to drill that, and we had done some geophysical work and geochemical work and delineated targets, we'd received our drill permits and we were sort of gearing up to go drill it ourselves. Barrick sort of came knocking and we started some dialogue on their interest in earning into this thing. And so as much as we gave up a little bit of maybe that total home run upside, what we allowed is we mitigated the risk. We've got someone else who's got incredible regional experience and expertise of the geology of that part of the Dominican Republic because they've been mining there for 10 years. And someone with very deep pockets and the ability to, under the terms of our agreement, spend up to $10 million or a minimum of $10 million in exploration. And that, for a junior company like ourselves, to be able to mitigate that risk, reduce our sort of dilutive, ongoing expenditure process by, getting a carried interest, and we will retain 30% of whatever Barrick does there if they earn their 70. And so again, I think for us, that's an ability for our shareholders to get that upside exposure on exploration success or discovery success, while mitigating the downside of, sort of drill and miss and then raise money and then drill and miss. There's no guarantees here in this business. So we think it was a well-structured deal, and there's some, some additional aspects of it that, again, we think are quite compelling and good for us and gives our shareholders an opportunity to ride that potential success while we shift over again to something else that we will drill ourselves and own 100%.
Yeah, and I think that makes a lot of sense. Again, you and I talked earlier about my predilection for getting any diversification rules. But I mean, when you already have a junior miner and then certainly the macroeconomic landscape we're in, I actually liked hearing that and thought, you can make everything a super long shot, or you can also have a higher probability. So I thought that made a lot of sense, and I appreciate you sharing that. And I think in the end, that's the thing where if you find, what it is that you specialize in doing and then match that with the investors who are looking for that type of expertise, is when good things happen. So Jeff, perhaps before we wrap up, you could just share how folks could get in touch with you, find out some more information, and if they're interested, how they can contact you.
Yeah, so we trade on the Toronto Venture Exchange under the symbol PRG.V. We also have a listing on the OTC, which is PREIF. Our website is precipitategold.com, and there's all kinds of information there with respect to corporate presentation, which is up to date to the month of June here. All the project information, corporate information, share structure, and of course, contact information to reach out and either be added to our email list for ongoing updates and announcements, or to reach out directly to the company via our info@precipitategold.com general inquiry email address, and happy to sort of respond to anybody if they've got any specific questions or want more details on Precipitate and our work in the Dominican Republic.
Well, Jeff, I appreciate that. It's exciting to hear the way you're doing your project, the way the environment is also shaping up. I think it's going to be a good time for folks that understand the risks and also the opportunities that are out there. So thanks again for joining me. We'll look forward to following your success and check in again soon.
Sounds great, Chris. Thanks for the opportunity.